GM, everybody, welcome back to the channel. It is Thursday, the 7th of November. That means it's FOMC day. However, I do think after the US presidential election, we've obviously got plenty of volatility already in the market. So today is probably not going to be as big of an impact as the last couple of days have had, or what would usually happen. The market is currently pricing in a 25 basis point cut from the FOMC. So I really do think that that is likely to happen. I think the odds are currently something like 95% of that cut happening. So the market should be fully pricing that in. And obviously, we've seen a big move over the last couple of days due to the presidential election. Yesterday, we closed on Bitcoin very, very strongly, up here at well, close to 76,000, which is a really strong move. So fresh daily close on all-time highs, and today obviously we're starting to pull back slightly. I wouldn't be surprised if we do come down and we touch this sort of 73.6 area, obviously previous all-time high support. Now obviously been resistance. Now we're looking to flip that all-time high level to support. Potentially we might wick a bit lower, but I would think on a closing candle for the day, I want to see that 73.6 level hold, and potentially from there, with a decent FOMC giving us another rate cut, we may then go higher. However, a lot of it will come down to what Jerome Powell says in his press conference. There's obviously been some talk about the Fed now starting to add assets back onto their balance sheet. Obviously, following all the stimulus from COVID, they had been taking assets off the balance sheet, so they've been selling assets. But however, if the Fed now start to purchase assets, this is going to be very, very bullish for the market. We will see that liquidity expansion from the Federal Reserve, increasing their balance sheet, and this is obviously a form of stimulus and quantitative easing, putting money back into the economy. And this is what we really want to see to get that really, really accelerated bull market in not only the stock market, but also crypto as well. So that's something I'm expecting to happen. If we also look at the dollar, because there was quite an interesting reaction from the dollar following the election result. We saw a big pump in the dollar actually yesterday, and we've actually running now to the 786 resistance level in terms of the Fibonacci. So let's see whether this does provide sufficient resistance for the dollar and we do start coming over here. But look, I mean, a strong dollar is not completely essential for Bitcoin to go higher. Or should I say a weak dollar is not essential for Bitcoin to go higher. We do see periods in Bitcoin's price history where dollar has been going up and Bitcoin has been going up. And I think really, as long as Bitcoin's still going up and dollar's going up, that's a fairly bullish sign, because it makes you then think, what happens when the dollar then starts to go down? How high does Bitcoin go then off the back of dollar weakness if it's already been rallying during dollar strength? And I think this is another thing that's making me quite bullish when it comes to the Fed increasing their balance sheet and they actually start buying assets again. It's like we haven't seen that yet. So if you look at the deck, these are other cards that we've got to now sort of play on the deck, fall onto the deck. It's like, right, we've got, you know, a strengthening dollar. When that starts to weaken, that's going to give us an extra tailwind. We've then got the Fed starting to buy assets back. That's going to give us a further tailwind. So these are all bullish catalysts now for the Bitcoin price that we can look forward to over the next few months. Obviously, we've had the bullish catalyst of the ETF going live. We've had the halving. We've had Donald Trump getting elected as president. So we are starting to use up our, you know, our best cards, should I say. However, there's still a lot further for this market to run. And I think, you know, you're still not too late to buy crypto and to buy Bitcoin right now. However, you're getting to the point whereby as Bitcoin starts to push further and as we start to sort of break out to higher prices and higher levels, and obviously We spoke yesterday about one of my targets being around about this 92,000 level. As we start to make our way up there, then obviously you think to yourself, well, at what point are your trades or positions invalidated? Well, probably if they were to go back below the previous cycle all-time high, back below maybe sort of 30, call it 73,000. So then you kind of say to yourself, well, if the invalidation is below 73,000, then it's worth accumulating sooner rather than later, right? Because obviously right here from current price at 74, you've only got 1,000 in terms of your invalidation. However, the higher we go, in a way, the riskier it gets. But when it comes to retail, it actually feels more comfortable because it's like, well, Bitcoin's going up. It just keeps going up and up. It's comfortable. Everybody's talking about it. And this is how retail then start to get sucked into the market, usually at the worst time, because if you're watching this video right now, you're either in the process of accumulating crypto or you have been accumulating crypto over the last few months, potentially over the last few years. So you're going to be on good profits. But we know from history and experience, which tells us that the majority of retail, they get in when the number's really high because they think to themselves, oh, like it's been going up, it's done this over the last year. What if it has another year like this? And they don't completely understand the crypto cycles in the same level of detail that people like me and you do. So that's something to watch out for. I still think this is a time, if you are, I'd call it, somebody that is clued up and, fairly retail, but also like more of a smarter retail investor, you still have an opportunity to sort of buy any dips in the market now because we've likely got many, many months ahead of us. But obviously, as those months pass, then the upside returns, they start to diminish. And obviously the risk of a deeper pullback or correction, or even the bull market top being put in, potentially it doesn't come in at the end of next year when a lot of people are expecting it could come in earlier next year. Obviously those risks then start to get more weight, and we need to be more aware of those risks. So I still don't think it's too late. One thing I have noticed over the last day, and obviously this is something that we touched upon yesterday in the stream, is that Ethereum has started to push up. So we drew in this resistance level around about 2,800. And we said potentially between 2,800 and 3,000 is going to be an area that is probably going to be quite difficult for Ethereum to just blast through. Obviously, we got the lows of this range from earlier on in the year. We've also got this 200-day moving average coming into play. So look, I think, obviously Ethereum's wicked through that 2,800 today into our resistance. I think we just need to see how this plays out. I'm expecting Ethereum to do quite well and start to catch up Bitcoin and Solana over the next 2 to 3 months. So I would think, look, if Bitcoin's pulling back, which it is right now, you're probably going to see Ethereum pull back too, which it started to already based on, the wick we've got here. It's likely that as Bitcoin starts to take its next leg up, we could then see Ethereum start to outperform. If indeed we're going to see this breakout of this 2,800 to 3,000 level, I do think when Ethereum starts closing candles above this 200-day moving average, that it will start to then accelerate to the upside. And I think there's a fair bit of open space here to the upside to take us back to around about the 4,000 level, and then from there probably higher over the coming months. I mean, this is the time. It's the bull market. If Ethereum's ever going to explode to new all-time highs, it's going to do it over the next 6 to 9 months. So it's a pretty exciting time, and I still do feel that pullbacks on Ethereum are decent buying opportunities here. Whilst Ethereum is still below this level, I still think Ethereum is a great buy and a good catch-up trade. And if we just take a look at Solana as well, we can see that Solana is showing strength. It's broken this descending diagonal trend line. We are now making our way up to the second one of these trend lines that's a little bit higher up. And then from there, we'll start to come up to the $200 to $210 area, which is obviously our current cycle highs, call it that. Obviously, Solana was higher in the past, so we are looking to see Solana probably outperform, I would have thought, Bitcoin over the remainder of the cycle. And I would have thought with Bitcoin's next leg up, we're likely to see Solana then start to push in to this cycle high resistance around about the 210 mark. And then, like I say, a breakout from there, and things really should get going for Solana. So that's really what I wanted to cover. Obviously, I've touched upon the dollar. I've touched upon, I'll just very quickly touch upon the stock market as well, because we've seen the stock market have a big reaction. S&P, all-time highs. NASDAQ, pretty much all-time highs too, there or thereabouts. It's looking like it's going there. So the markets are looking strong. Like overall, I'd say that, you know, dips are probably for buying here. If we see some weakness in Bitcoin and we see price start to come down towards, you know, the 73.5 level, like anywhere around the 73.6 level, I think that is probably a dip to buy. Obviously, we could come down deeper. We might come down to this 72 level as well if things start to get very volatile, potentially after the FOMC. Based on what Powell says, we could see some volatility. We could see a spike lower. But ultimately, I do think over the next couple of weeks, Bitcoin does go higher. So in terms of targets, like I say, I'm not expecting this to go straight up to this 91,000. I probably think there is going to be some areas on the way that are important to look out for. And if we just quickly throw on a Fibonacci retracement here, this will basically give us some Fibonacci extension levels from the consolidation we saw over the summer. We can see that the first level is coming in around about 88,700, and that's the 1.618. So again, that's not too far away from our targets here. So I would think that Bitcoin will make its way somewhere between 88 and 92,000 probably by the end of the year. That's what I'm expecting. There's probably going to be dips along the way, but that is my current outlook in terms of the Bitcoin price. So I'm going to leave it there. Thank you very much for watching. If you have enjoyed the content, please do smash a like. If you want more alpha that's going to be coming your way over the next few days and weeks, please do subscribe so you don't miss out. I am going to be coming up with a altcoin and, well, in particular, a meme coin video very soon. I'm going to be going through what are my top picks in terms of meme coins for the rest of this cycle. So if that sounds something like you'll be interested in, please definitely do subscribe so you don't miss out, because that video will be coming out within the next day or two. And have a wonderful day, and I will speak to you all again tomorrow. GM.